In 1989, Poland was flat broke. Communism had just collapsed. The average Polish worker earned less than $100 a month. Shelves in grocery stores were empty. The country was starting from zero. Fast forward to today. Microsoft just dropped $700 million into Warsaw. Intel is building its largest chip factory on Polish soil, and Poland is now spending more on its military than the United States, as a percentage of GDP. How did a country that was broke 35 years ago become Europe's most exciting economy right now? And more importantly, how do you get in before everyone else notices? Here's what most people get wrong about Poland. They think of it as just another Eastern European country, cheap labor, a struggling economy, always in Germany's shadow. But Poland has something almost no other country in Europe has. It is surrounded by crisis, and it keeps growing anyway. On its left, Germany, Europe's biggest economy, is in recession. On its right, Ukraine, at war. And Poland, GDP growth of 3.2% in 2025. Projected 3.5% in 2026. Poland sits at the crossroads of Western Europe and the emerging East. Every company that wants to be in Europe but not pay Western European prices lands in Poland. 650,000 tech workers, salaries 60% cheaper than Germany, and a population deeply educated in engineering and mathematics. This is why Microsoft is here. This is why Google is here. This is why Intel just committed $4.6 billion to build a semiconductor plant. Poland didn't get lucky. It built something real. Now, you've probably heard about the tech boom. Maybe you've seen something about Poland's fintech scene. 383 active fintech companies, most of them profitable. But here's the part that almost nobody in the investment world is talking about. Poland is becoming the most militarized economy in NATO. Poland is spending 4.8% of its GDP on defense in 2026. The United States, 3.2%. Germany, barely 2%. Poland is number one in the entire alliance. And this isn't just buying American weapons. Poland is building a domestic defense industry from scratch. Drones, missile systems, cybersecurity. The Polish government has committed to spending $300 billion on defense between 2026 and 2030. When a government spends that much money domestically, it doesn't just build an army, it builds an ecosystem. Engineers get hired, factories get built, software gets written, and all of that economic activity shows up in one place, the Polish stock market. So, what has actually happened in Poland's markets? In April 2025, Poland's main stock index, the WIG, crossed 100,000 points for the first time in history. The Polish government called it the strongest market in the world in 2025. By February 2026, the WIG hit an all-time high, still sitting around 26% higher than 1 year ago. How does that compare to what you already know? The S&P 500 had a great run, 24% in 2023, 23% in 2024, another 23% in 2025. 3 years of double-digit returns. Impressive by any measure. But Poland's WIG? 37% in 2023, 46% in 2025. And EPOL, the US-listed ETF that tracks Polish stocks in dollars, 50% in 2023, 77% in 2025. If you put $100 into the S&P 500 at the start of 2022, today you'd have around 147. If you put that same $100 into EPOL, today you'd have around 166. Different path, different volatility. But over this window, Poland won. How do you access this from the US or through interactive brokers? The most direct way is EPOL, the iShares MSCI Poland ETF listed on the NYSE. Year-to-date in 2026, up 15.4%, trading around $40, dividend yield of 4.39%, one fund, NYSE listed, covers banks, energy, retail, and tech across Poland. If you're using interactive brokers outside the US, the European version is IBCJ, same underlying index, London and Frankfurt listed. For individual stocks, interactive brokers gives you direct access to the Warsaw Stock Exchange. 3 names that have driven Poland's rally. First, PKO Bank Polski, ticker PKO.WA on Warsaw, or P90 on European exchanges, Poland's largest bank, net margin of 34%, dividend yield of 7.73%. Second, Projekt, ticker CDR.WA on Warsaw, or OTGLY on US OTC markets, the studio behind Cyberpunk 2077 and The Witcher. First quarter 2026 revenue up 6% year-on-year. Third, KGHM Polska Miec, ticker KGHPF on US OTC markets, one of the world's largest copper and silver producers. Full year 2025 net income up 25% from 2024. These are the numbers as they stand today. Past performance tells you what happened, not what comes next. Poland is an emerging market. Emerging markets are volatile. The zloty, Poland's currency, moves against you when global risk appetite drops. And if the situation in Ukraine escalates, markets don't always reward the country closest to the conflict. This is not a buy-and-forget investment. This is a conviction trade. You need to believe in the story and watch it. Poland in 1989, bankrupt, empty shelves, starting from zero. Poland in 2026, Microsoft, Intel, NATO's biggest military spender, and a stock market that outperformed the S&P 500 out of the last 3 years. The window for early movers is still open, but windows don't stay open forever. If this gave you a different way to think about where growth is actually happening in the world, hit like. Subscribe, because next week we're looking at another country most people are completely sleeping on. And drop a comment. Which country do you think is Europe's most underrated economy right now? I'll read every single one.